From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for September 26, 2016. I hope you had a great weekend and are ready to get started with trading this week. In today's video, I'm going to do a general overview of each of the U.S. currency pairs in anticipation of this week's trading. And I'm going to highlight some of the key levels that we will be looking for entry and exit opportunities. We have an interesting news calendar this week. Taking a look at forexfactory.com, we have several speeches from some key economic leaders throughout the week. So you want to pay attention to that, and you'll want to be sure to check your financial calendars for the latest news and economic releases throughout the week. Let's go ahead and dive right into the market here. We're looking at the USDCHF, the dollar franc. On the daily time frame, we could see this larger black box, the long-term range that we've been in for quite a while, rising and falling multiple times within this range, basically since the beginning of 2016. As we zoom it in one time, we can see that even over the past couple of weeks, we've been in a tighter period of congestion, or ranging, if you will. This blue box on the right-hand side, green zone up towards the 9,800 level as the resistance, and the blue zone towards the bottom in towards the mid to upper 9,600s as the support. Currently, of course, we're sitting at the support at the blue shaded area at the bottom of that range or period of congestion. The question, of course, will be this week, what's going to happen? Are we going to see the break of the blue zone and the continuation lower, or is it going to bounce off it like it did the last time, go back up towards the green zone or higher for the franc? And, of course, we'll keep an eye on our fundamentals as we go throughout the week, but I think we can look for some key decision points here for the franc. 96.90 down to 96.70 is the blue shaded area. And for me, as long as it stays within or above there, I'm watching for clues to reversal. I'm watching for evidence that the buyers might be looking to take back control and drive it back higher. Now, I'm really only going to look to go short and sell the currency pair if it can break through this barrier of support, the blue shaded area, 96.70 being the bottom. It needs to break it before I would expect it to go lower. Earlier today, as mentioned, we had the S&B chairman Jordan speaking at 5:30 a.m. this morning, and of course, so far today, we've seen a little bit of bearish price action. Let's go ahead and take this down to the 4-hour time frame, and again, we can see a little bearish push here so far this week as it pressures lower into the blue zone, but again, has not broken it. Take a look back here on the left. The last time we were here, we saw a dip, rally, dip again, and then suddenly reverse and start going back up towards the top of the range. So I don't want to take this for granted and say, well, it has to keep going down, because so far today it's been going down because it was doing that over here. So again, if I'm going to go short, the first thing I need to see would be a final breakdown of 96.70. So we can't go short until it does that, or at least I don't want to go short until it does that, or it rallies back to the yellow zone, which it did last week. Now, on the other side again, we could be looking for clues and evidence of reversal. Later on today, we do have the ECB President Draghi speaking at 11:05 a.m. Eastern U.S. time. New home sales just before that out of the U.S. Both of those things may bleed over a little bit here to the U.S. franc, so we'll keep an eye on that as we go through our day today. But definitely watching this blue shaded area today. If I'm looking for buying opportunities, this becomes a point to watch for evidence of support, influx of buy orders, and potential reversal. If I'm looking for going short, it needs to break through 96.70 today or even tomorrow before I would look for an opportunity to go short for the U.S. franc. Let's take it on over to the EURUSD, euro versus US dollar. And of course, as expected, we typically look at this currency pair in just the opposite fashion. If we're looking for support on the franc, as we just looked at, we're looking for resistance on the euro. Often very similar, yet opposite. Not all the time, but very similar. As mentioned, ECB President Draghi speaking at 11:05, or scheduled to speak at 11:05 a.m. Eastern U.S. time today. That, of course, has the potential to challenge this currency pair, and also U.S. new home sales at 10 a.m. Eastern U.S. time. We'll keep an eye on both of those things as we go through our day. But we're approaching resistance. We see the long-term red trend line. We've been underneath there for quite a while now. We see the blue trend line. We've been rising along there for a little while now. Of course, the question is, are we going to see it finally continue to pressure higher, maybe even all the way back up into the 114s or 115 level at the top red trend line? Or are we going to finally see it break down through the blue trend line and start reversing and go back down? We can't answer that question with 100% accuracy, but we can look for some price action that indicates one or the other direction. Let's go ahead and zoom it in. Right now, we can see the bulls are in control. 1, 2, 3, 4 days so far have been blue or bullish here on the chart. We've almost pretty much retraced this fall from the orange zone all the way back down. We've almost retraced it back to the orange zone. That's 112.65, 112.80 at the orange shaded area there on the chart. So again, as it approaches there, I'm very cautious about going long. I don't want to go long into resistance. We can see that resistance right there. Last time we were here, we reversed and went back down. So I don't want to go long into or underneath that resistance, like running into a brick wall. The only reason I would go long on the euro is one of two things. It either dips back down towards support, which at this point is the yellow zone, 112.20, 11200, or it breaks through that price barrier, the orange shaded area. Then history tells us if it can get through that orange zone, we possibly look for it back up here to the blue zone, 113.55.75. Let's go ahead and zoom it on down to the 4-hour time frame. And again, over the past several hours, we did see the push back above the yellow zone, a dip towards it, 112.20 or so, the last 4-hour candle, and now making that rise towards the orange shaded area. So we'll continue to watch this orange shaded area today as a potential resistance. Look at what happened the last time we were here. Lots of resistance and reversal. So we'll watch for clues and evidence of resistance and reversal, and infusion of sell orders, or sellers diving back into the mid to upper 112s. Or if we can finally break through 112.80 with a significant move, we'll look for the continuation higher. Take a look at what happened back here. When it got above 112.80, went all the way to the blue zone. So that's what we're talking about. We needed to get through that orange zone if we're going to look for it to go higher. We don't want to buy it under the orange zone, because history tells us that if as long as it's under there, that's resistance. So don't buy it under the orange zone. If you're going to buy it, wait for it to go down to the yellow zone or break through the orange zone. Otherwise, today we could be watching for clues and evidence of resistance and reversal from the orange shaded area. Take it on over to the GBPUSD. Here on this currency pair, you can see, of course, the Brexit vote on the left-hand side, the big red candle. Everybody knows about that. Since then, we've been inside the black box. Probably the most important about today's price is that we're at the bottom of the historic lows here, the bottom of the range, the black box. Take a look at the last two times. Let me zoom it in one time. Take a look at the last two times we challenged this yellow shaded area at the very bottom. I have it highlighted with two blue boxes on the left. You can see what happened. The closer you get to that yellow zone, very discouraging about going short into 129, 128.75, because look at what happened the last two times it was here. So very discouraging about going short the closer it gets to that yellow shaded area. It may still go down there, but very discouraging about going short the closer it gets. You know, you're only talking about 35, 40 pips away before it reaches that yellow zone, so nothing extraordinary as it approaches that support zone. So definitely cautious about going short. Watching for clues and evidence of reversal, of course, is something that we could do, but I don't think we're anywhere near any evidence of reversal at the current moment. Now, if we're going to go short, I often tell you in the trade room, we want it to go up into resistance or break through support. So that's what we're watching for. At least at this current point, I think you're looking for it back to the purple zone, which is closer to 1.3 thousand, or maybe a real quick intraday short underneath 29.35, but again, very cautious about going short so close to the yellow zone. I think our most significant opportunity to go short here on the pound dollar would be the breakout, open and close, single candle body underneath 28.75, signaling the continuation lower of the downtrend. So watching for evidence of reversal, that's what we could do this week. Watching for continuation below 28.75, but at least right now, very cautious and careful about going short so close to the bottom of the range. 4-hour time frame, we know where the green, the purple, and the yellow shaded area. You see it trying to peek through the 29.35 level right now. It definitely could break through here today and head down to the yellow zone. Just be very cautious the closer it gets to the bottom of the range on the pound dollar. Taking a move over to the USDCAD, similar situation here, except on the opposite side, you see the black box on the chart. We're at the top of the range. We've been here before. We do have Bank of Canada Governor Polo speaking at 7:10 p.m. this evening. We do have some other Canadian news throughout the week as well, but today, at least, Bank of Canada Governor speaking at 7:10 p.m. Eastern U.S. time today. So again, another speaker, a key economic leader speaking this evening. Let's go ahead and zoom it in here on the daily. Again, take a look at what happened the last time. The blue box here telling us what happened the last time we approached the orange and the green shade area, resistance and reversal. Even over the past couple of weeks, we've seen resistance and reversal So very cautious about going long. Doesn't mean we can't, but very cautious. Maybe using a smaller trade size and appropriate risk strategies in case the market turns around and goes back down. But obviously, Friday was bullish. Today, so far, we've seen some bullish. If you're going to buy it, you want to buy it low point. Obviously, the best time to buy this would have been back down here at the pink zone on Friday. But at least at this point, buying very cautious, selling no reason to. There's no indication or clue to reversal here, but definitely watching for that as we go through our day today. 4-hour time frame doesn't really give us any better help here. We can see the market rallying towards this little orange shaded area right here. That's 31.85, 32.05. We've seen it here before. Again, if you're going to buy anything, it makes much more sense to buy it into support, which right now is the yellow zone, 31.50, 31.20. That would become your best opportunity to buy. Just think if you had done that right here. Let me just take, let's take this green circle right here. Just think right here where this green circle is about to be. As soon as I can get it widened out a little bit here. Just think if you'd done that right here where the green circle is, and you could say buying into support, the yellow zone, boom, 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 several times opportunities to buy. So again, if you're going to buy it, that makes the most sense at the current point because your risk is that it breaks underneath the yellow zone and goes lower. So at least that gives you lower risk and higher potential reward. Next opportunity may be to push through the orange zone, 32.05, challenging the ultimate resistance high here into the 32.40.65 level for the USCAD today. Moving on to the US yen, long-term downtrend. We've spoken about that multiple times in the live trade room. Cautious again about going short because we're at multi-year lows down here at the very bottom of the chart. Let's go ahead and zoom it on down towards the 4-hour time frame. Take a look at this. We saw it bouncing around inside that black box for quite a long time. Finally broke out underneath there, went down to the green zone, rallied above the blue zone. Now we're back underneath the blue zone. You can see what happens over here on the left-hand side. When we're under the blue zone, we go back down to the green zone. So at least today, I would watch the green zone as support. 100 to 120 is the green shaded area. Of course, that key price level. We did have the Bank of Japan governor spoke earlier today, 1:36 a.m. this morning. We had the Bank of Japan governor speaking. Again, another key economic leader. It caused the market to pressure a little bit lower. If you're looking to buy this, I would say that closest possible to 100.0 is your better opportunity. And then, of course, you'd look for it to break above the resistance level, which is right now the blue zone, 185, 160. Then we could look for it back to the pink zone as our next resistance. Selling this at the multi-year low, even into 100, I think is a very difficult decision, selling on top of 100. If it breaks through 100, that may change your opportunity a little bit, but at least right now, selling on top of 100, a very difficult scenario for the US yen. Moving over to the AUDUSD long-term weekly trend line. That's important. We've studied that many times in the live daily trade room. Take a look. That's that weekly trend line, very important. Daily time frame, there's the red trend line. Why is it important? 1, 2, 3 times now. Challenging that. Buying into that so far has been a bad idea over the past several weeks. Look at that. One time here, fell down. Second time here, fell down. Now we're at the third time. So again, buying into the blue zone, 76.40, 76.70 is a difficult proposition buying right now into that blue shaded area because history tells us it's not a good idea. So if we're going to buy it, obviously it needs to break through 76.70 before you would buy it, or dip into support, of course, which is not there now. That would be down here closer towards the upper 75. So if you're going to buy it, it needs to go down or break through the blue zone. At this point, not a great opportunity to buy it. On the other side of that, if it's not a great opportunity to buy it, what about going short? And I think that may be an opportunity we could look for today, as long as it stays within and under that blue zone. Which again is 76.40.70. I think that might be an opportunity for us today, with our risk, of course, just above the blue shade area, stop loss above it, because if it breaks it, you don't want to stay in it. You can see that on the left-hand side, and of course the red trend line. So underneath the blue zone may be an opportunity for you today to target back down to the mid to upper 75s or lower if we can see some further reversal here for the Australian dollar today. And lastly, moving over to the NZDUSD, similar situation. Difficult to buy it at the top of an uptrend, but we are in a period of congestion ranging. Last week we took sells and shorts here on the New Zealand dollar into the black box, the pink shaded area. Significant profit made from the pink zone down to the green zone. Now, of course, challenging the bottom of our range, the black box here that we've been studying for several weeks now. And of course, we're looking for opportunities to go short again, which would be twofold. We either look at the orange zone as it approaches 72.80, 72.95, or maybe even once again back at the pink shaded all the way up at 73.25, 73.50. It's been a good proposition to sell this currency pair under the red trend line, under the pink zone. It was very profitable last week. Next thing we need to see is the breakdown of the green shaded area, which obviously it has not done that. It hasn't broken the green zone. There's no reason to expect it's going to continue lower until it actually breaks through that green shaded area. That is your current support. If you're buying, of course, if you're looking for support and reversal, the green zone becomes your opportunity. Back to the orange, pink, and above the pink zone could look for continuation of the uptrend. Right now, we're stuck in this black box, the range between the green zone, orange zone, and pink zone. Sellers, wait for it to go up before you would sell it or break through support. If you're a buyer, buy support, break through resistance here for the New Zealand dollar. Take it down to the 4-hour time frames. Not going to change in any. You do see the market pressuring higher right now. Of course, that gives some headway for the buyers. If you're looking to buy it, you need to stay on top of 72.50. Sellers are getting more anxious as it gets closer to the orange zone, or again, I think even better would be the pink shaded area for the New Zealand dollar this week.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.